What up, peeps? Welcome to the Kisscapades podcast. I'm your host, John Telewa, aka the Kissbandit. And in this show, we explore the key elements that shape our fulfilling existence, from health and well-being to financial success, meaningful relationships, and the pursuit of happiness. We cover it all. Our guests include experts, professionals, and everyday individuals who have remarkable stories to tell. Tune in to learn practical tips, gain valuable insights, and discover strategies for personal growth and transformation. Whether you're seeking to improve your health, build your wealth, enhance relationships, or find lasting happiness, we got you covered. Welcome to today's episode. Welcome to another new episode. Today I have a very special guest. I'll just let him introduce himself because today we are just talking about a little bit more serious stuff. When somebody mentions finances, I think it just, it kind of tickles a different feel and just makes you take things a little bit seriously. But it's supposed to be like just a common conversation that people have. So I'll just let you introduce yourself before I jump onto my questions.
All right. Thank you, John. And I'm hardly special. I think one of the problems I see a lot around finances is people think they're special. So I think that's the first place maybe we need to start from. But yeah, my name is Russel Akwom, and I've worked in the financial sector for almost 15 years now. Started from M-Pesa, Safaricom to banks. And right now, I'm building payments across around 11 countries in Africa. So I'm having fun doing that. I also do a lot of extracurricular in health. So when you mentioned health and wealth, that's one of my passions. So I do a bit of kickboxing, marathons.
Oh, wow.
Yeah, and cross fitness. And I'm also a bit into music. I picked music while still in school. I try to do a few gigs here and there. I love playing the saxophone. So that's one of the things that I do. And thank you for having me.
You're
and
welcome.
I really want to, engage in this interesting topic.
Nice.
Yeah.
So now I think definitely the whole thing about finance, without good health, what's the point, first of all?
Yeah.
What's the point, first of all? So anytime somebody talks about fitness, exercising and all that, I respect that because it takes a lot of willpower, first of all, and discipline. If you're doing it on a regular, it requires discipline. But anyway, let's start with the finances first before we go into just health and, general wellness. So, modern versus traditional ways of actually, should we say, investing. We can start with that. Because coming from, let's just say, a third world country, things like building wealth might not be for a majority. Or maybe let's just say you're coming from a household where it's not a traditional conversation. You don't talk about money. You don't talking about how your kids and your kids' kids can inherit that generational wealth or even just continue building. So what are some of the new ways that you think people can get into investing?
Yeah, so finance has never been traditional or modern. I think that's where we need to start from. You look at industries, start from the entertainment industry, for example. It's really been disrupted because the lines between traditional and modern are very clear. You go to retail, Amazon has totally disrupted the normal sort of operation of supermarkets.
Yeah.
But financial industry has never been really disrupted by anyone. When crypto tried, and I insist tried, but it really hasn't. So finance has never been
We'll have a heated conversation about that.
Yeah.
Okay.
So finance has never really been traditional. I think it's one of the industry that has really, really maintained its position in old ways of doing things. It's very conservative Okay.
Yeah.
Now, I think the first step towards finance for me, I usually purport that I'm not an expert. I like sharing some of the experiences, most of the experiences that I've had.
Yeah.
I build curiosity, I get into something, then I share those experiences. So for me, I think finance starts from your mindset, and that's where the traditional and modern thing maybe starts from. You mentioned how we discuss finances at home. Okay? Think to yourself.
In my household, we don't.
Oh, okay, that's interesting.
But I bring it up.
Yeah.
I'm always the one who's like, yo, we need to know. Tell me about the numbers. Tell me about.
Oh, okay.
It's almost like a taboo thing because,
Yeah.
if you're growing up, can you ask your dad, like, yo, how much do you have in your account today?
Yeah, but there are snippets of finance. So, for example, you'd ask for something and they tell you we don't have money for that. That's not finance talk. But I think one thing people don't really notice is that anything you talk about money to your kid, it sticks. Okay? True. So me being told money doesn't grow in trees sort of builds a thought about money, that money is scarce, some scarcity mentality. And once you start thinking about that, it affects how you eventually think about money as you grow up. Even as a grown-up, you start thinking money is scarce. And when you start thinking something is scarce, you're going to have difficulties getting it. So thinking about finance traditionally starts from your feelings about money. What do you feel about money? What are your thoughts about money? Because that ultimately affects your financial situation. It's always linked. Okay, if you view money as something that is scarce, I can bet your financial situation, it's not so good. And if you think of money as some people think of money as a tool. Others think of money as something you can use to even build more wealth. Okay, and that then informs your financial institution. Your financial situation. We keep saying the rich get richer. Yeah. And the richer humans too, they die, right? But they keep getting richer. Yeah. It's the conversations that they have with their kids about money that now get propagated once the old folk go. So they continue becoming more and more rich because of the feelings, the situations, the experiences they had about money while growing up. So that's very important.
And even just on that, sorry to cut you off, but I just want to throw something in there because I've just remembered something else. Even when you talk about like the rich getting richer and having that conversation with your kids, the reason I'm bringing up something like taboo, it's like, let's say, going to an old school dad and telling them like, hey, here's the thing. Let's say I know you are 80 years old right now, and there's this thing the bank is saying, like, if you've been paying, like, life insurance and stuff, in case you die, we get to keep X amount of money. So immediately this old school dad is like, so you're just basically just praying for me to die so that you guys can get to squander this money. Or even in some situations where there's somebody who had like a life insurance, but the kids maybe or the wife didn't know. And then somehow that conversation, because you have to discuss things, let's say you're ill and stuff, you have to start having that discussion with like wife and siblings. We've seen it in the news all the time, billionaire kids fighting and just having those wrangles and stuff. That's what I'm saying, like, how do you just normalize something like that without affecting the old man or the old lady of the house and just making it a normal thing?
But do you need to normalize it? I think that's the first thing to start from. So a good example, you approach your dad and you introduce this subject, and chances are he's going to go berserk. And if he doesn't really go berserk, he'll be thinking, what's my son up to on this, right? And that's, you could talk about it from a point of, there's a way Africans think about life, and it's not just on money. It's on so many other things, okay? If you introduce it, it becomes a taboo, okay? So how do you make it less of a taboo, okay? I don't think there's a way. It just depends. If you're lucky to have parents who are more liberal to start discussing this, then that's okay. Most of our parents are not that liberal. However, that shouldn't stop you from talking about it to them. I really encourage guys to really talk about finances with their families. Okay, be it your dad, your mom, your wife, your spouse. It's very key because this is one of the places that really needs collaboration. Otherwise, if there's any misunderstanding across that chain, because a family is like a chain, if there's any misunderstanding across that chain, then there'll be problems. You mentioned kids fighting for
sure.
parents' wealth. It's because they don't discuss things. I believe they don't discuss things that they should be discussing. Okay, Africa especially, we have what is known as the black tax, right?
Yes.
Okay? You're expected to take care of your folks when they've retired. One of the things I asked my dad is, why do you need to retire in the first place? Why do you need to retire? You know, and you know, it was a very interesting conversation. Okay, because he was looking at retirement differently. So for him, retirement is not, you know, stopping to work. Retirement is, hey, you're gonna have to start taking care of me now. Okay, but does he understand where you come from? Recently, I watched a video on TikTok about some Kenyan lady, I forget her name, complaining about her folks asking her to build them a house.
Yeah.
Okay. And she was literally saying, I'm 25 years old. Yeah. You've had a 25-year head start. You haven't built that house for yourself. How do you expect me to build that house for you now? I'm just starting out. Okay. Valid point. However, most parents would look at it as an unruly child. Okay. So if you don't discuss that, the only problem she did is she's discussing it in the social media instead of with them.
No, it's the aunties sending her videos. And
So if I were her, I would just sit down with them and just let them understand my financial situation, what I can do, what I cannot do. Then we arrive at a point where we both understand that I'll help you, but this is the far I'm going to help you. And it's good to help, by the way.
Yeah.
Okay? It's really, really good to help because with responsibility on the spending bit comes responsibility on the management bit.
True.
So if you're going to pick up extra responsibility helping your folks, that is good. So it might be a taboo to discuss, but don't give up. Keep discussing. Sit down with them. Let them understand your situation, understand their situation, and come to an agreement.
And I think also, like, just even on that point, before we go to the next one, you'll notice like there's some communities that do make this a general conversation from like childhood, or you'll see them having like, even if it's not discussing, but they engage their kids in things like businesses or finances. If you're free, just know if we have a shop, you're here, you're counting money, you're banking it, and you kind of get used to, you know,
and it goes
just
deeper.
even touching physical money and actually saving, cutting down on cost, calculating all those little things.
Yeah, and it goes deeper. It goes really, really deep because generally Africa, we've always been so much about welfare. Okay?
Yeah.
In fact, I always tell insurance companies that I feel the you know, when they come to present to you, they tell you that, you know, insurance penetration is like at 3%. They tell them, who told you?
Yeah.
Right now, if one of my cousin's sister, for example, dies, we all come together and we, you know, contribute money towards that. That's some form of insurance. So we've always had insurance, even before insurance companies sort of existed. So it just goes deeper than what you explained. We are very welfare based. We always want to help out, okay? But how modern life has turned out, sometimes makes it very hard for us to help, and that's why those conversations are very, very key. I would misunderstand your position on something if I didn't know where you are coming from.
Yeah.
So it's very, very important that people understand where you're coming from before they really understand your position.
Okay.
And once that's understood by everyone who needs to, your spouse particularly,
Makes
and
a
your
big
parents,
difference.
it makes a whole new difference for you. And
True.
Yeah.
So now another thing, because I know I mentioned this earlier, what would you, not particularly the specific thing that I'm going to talk about now, but I mentioned modern ways of investment.
Yes.
But before we dive deep on that, what would you consider, how would you describe financial literacy? Because in general conversation, people say that you can't get this in school, and it's not something that you get home. It's something that has to be self-taught. Because even when we're talking about like you discussing this with parents, friends, and everything, just at least being able to sit down collectively and just talking about like money. But like, how would you describe financial literacy? What in your own words, how would you describe it before like we get into that?
So to me, financial literacy would be, how then do I manage my money? Okay. And management now goes beyond, when I say manage, what do I mean? And that should be different to individuals. So financial literacy for me is something that is so unique to you as a person. Okay. What do you want to do with your money? And how do you manipulate your money, so to speak, to get to where you want to do whatever you want to do with your money? Okay. So that's financial literacy. So to me, so what I understand that I should do with my money is not necessarily what you understand, because our financial goals should be different. They are different, so they should be different. Now, how you get to your financial goals is now what financial literacy is to me. Okay, and it's very important to always stay hungry. I know we use this word "stay hungry" a lot, but it's so important when it comes to money, because the more hungry you are, the more you learn, and there's so much to learn when it comes to money. So much.
It's quite a lot. It's quite a lot. Even when you think you've learned something, you always discover something else, something new every day.
And that's the learning bit, right? So learning for me is complete when you learn, unlearn, and relearn. So that's, for me, is the complete cycle of learning. You don't just learn and move on, because there's always, things are always evolving. You talked about modern. Things are always evolving, depending on situations. So it's good to keep learning and relearning. But, of course, there are basics in financial literacy, but the complete financial literacy is something that is unique to you. So what I would advise is you sit down, think about yourself, think about 5 years from now, 10 years from now, where do I see myself with respect to finances? Okay. When I retire, where do I see myself with respect to finances? And then what do I need to start doing today to achieve
secure that, right?
Now that becomes your financial literacy. And it's not a destination. You keep learning. Okay? You keep learning, you keep making mistakes, you keep rectifying them, and you keep moving on. So that's how I would explain financial
describe
literacy.
It, right?
Yeah.
So now let's go into the financial literacy execution bit now.
Yes.
So, I mean, let's say they say like your average person is living probably close to hand to mouth. Because we're doing like kind of like a breakdown yesterday, I think, with a friend of mine, because we just normally just call each other and actually just start talking and breaking down stuff. And even like with my assistant, at times I also like include her. And I always ask her like, okay, how much do you think you need maybe to just survive, like, let's say Nairobi? And we say like, let's say start with a salary of like, let's say like 100. If we take out, let's put in taxes, like 30%-ish there. I mean, I don't know, because I'm not in an 8 to 5, so don't misquote me, but I think it should be roughly around there. We take the 30% off. Maybe we do like your rent 20, we do your utilities and stuff. Like, we broke it down perfectly without misusing funds, and you literally had money to go just back to work, to check in, and clock out. So I'm just trying to wonder how, like, your regular guy who has to check in the office from the 9 to 5, from that salary margin, which is still, I think, not average. The average salary is slightly below 100. So how do you kind of get to your financial freedom, or even save for retirement, even if you're being like super careful with your money?
You know, once I heard, it's not how much you earn, it's what you do with your money.
Yeah.
Okay. And the first time I heard that, I scoffed at that. But I've come to learn it's so true. Okay. A lot of people talk about financial independence, but let me give you two scenarios. Let's imagine there's a person A earning 100,000 per month net, right? Let's just net it for ease in explaining this point. And maybe...
And for those people... my podcasters, by the way, some hustlers, people who are doing biasharas, net means...
That's what you take home.
Yeah. So after taxes.
After taxes, NSSF, NHIF, all that.
So that's what you have checking in your account after all the deductions that are done.
Exactly.
Yeah.
And in that 1 month, your expenses are 50,000.
Yeah.
Okay. You've managed to put your expenses at 50,000. And then imagine person B earning $1 million net per month.
Yeah.
Yeah. But this guy spends 800,000 a month. Okay. So just imagine that. Who do you think is in a better situation 5-6 years from now? Okay. So it's really, for me, what you do rather than how much you earn. Now, how do you, because you asked, how do you get to where you need to be?
Yeah.
Again, depends on what's
financial freedom. Let's just say at least by the time you get to retirement.
Yeah.
I mean.
But then how would you describe financial freedom, right? I think that's key because different people have different definitions.
Yeah, definitely different.
Financial freedom.
Let me try and put it this way. Let's say, even just in case you get fired, you can cushion yourself for a while.
Exactly.
Yeah, let's just at least work with that because financial freedom, we're talking about that has to be a long game plan, right?
Yeah, and that's good. So, so I look at it, financial freedom means I could sleep a whole year without working and not lack anything.
Yes.
Maintain my lifestyle, whatever it is. So the best way to get to a financial freedom is when your needs are as minimum as possible. Okay? And this is where it's usually very difficult for people. One, because there's the patience aspect. We are not patient enough.
Delayed gratification, right?
And then the second bit is peer pressure, especially among the young folks. I see my neighbor bought a Subaru, and I'm thinking, man, I can do this. I'm earning more than him, right? Yeah. So those two elements. So how you get there is not really how much you earn. Is, again, I'm going back, what you think about money. But then you really need to be patient. And you really need to cut out all the peer pressure and focus on what you need to do. Write down what you need to do. So, for example, if you are to get to financial freedom in 10 years' time, and financial freedom here is described as what I just described. I could sleep a whole year without necessarily worrying about working. Okay, ask yourself, in 10 years, how much am I spending now per month? Let's say it's 50,000, right? So in a year, that would be around 1.2 million, is it? Yeah.
Yeah.
That would be around 1.2 million. So you need 1.2 million to survive a year. If you're, sorry, 600,000. Sorry.
It's 600.
Yes. 12 times 5 is 60.
Oh, yeah.
600,000. Yeah. So you need 600,000 in a year, right? So you ask yourself, what can I invest in now that is going to give me 600,000 now? But it needs to be now because you need to figure in the time value of money. 600,000 now is not 600,000 10 years from now.
Oh, yeah.
Last year, I think the average inflation was 9.02%. Horrible.
Saving money right now, it's just and that's why we still have to go back to the traditional. And I think back then I just used to remember people saying saving, even parents, and make sure you save money, save.
Exactly.
I don't think that's something you can do now.
Exactly. So, so you need to look at what is going to give you that money per year on an investment bit. So where then do you take your money? Where do you invest? Rightly said, savings, especially saving in a savings account in a bank.
Yeah.
One thing I've learned through all this is the number 1, 2, or 3 product that a bank is trying to sell to you is never the best product for you. Look at all the products they have, 1 to 10 maybe.
Yeah.
And if you need to buy a product from them, buy the number 10. the top
The
three,
one
top
that's
four,
not
top
pushed
five,
the most.
yes, those are not really for you. And one of them is usually the savings account that they sell to you. I don't know what the average savings interest rate is now. Probably 4 or 5%.
Might be less. 4%.
It's 4%, yeah.
Okay.
So that against a backdrop of 9% inflation rate, so you actually lost money.
Yeah.
So savings normally is just for if you feel that you need some, sometimes during the month you might have some irregular spending that comes in. So just a little money for irregular spending, and you can determine what that is. Some people think it's 10,000, other things it's 30,000. Especially if you're driving a car, you might gonga somebody.
Yeah, that's just something that will just happen.
The traffic,
you didn't plan,
Yeah, or you might need to repair your car. So you need some little amount that you can access, like really fast, if you need to get you back to where you need to be. However, you should be very, very deliberate not to save in such things. One of the best areas that I've learned to put my money is, and she'll support me, is in money market funds.
Yeah.
Okay?
She was telling me about that, and I was like, I'm not buying that yet because personally I'm more of a bonds person.
Yeah.
It's either bonds or crypto.
Yeah.
So high risk and low risk. So I'm on extreme ends.
Yeah.
Super high risk. And then also like...
Yeah, but now you're graduating it. So first there's that irregular spending that you can put in a bank, no problem. Just go into an ATM and get it. Then now you graduate to the next level where you're thinking about an emergency fund is very important, by the way. Because so many people have their financial destroyed because of an emergency that came into being. Probably
medical.
Somebody gets cancer. Yeah. And you need to support them, somebody very close. Okay, so that emergency fund is very key. And then maybe like last year it happened. A lot of folks lost their jobs. Yeah. Okay, what do? That's when you tap into that. So that now you put it in a money market fund. Any can do. I don't propose any product.
But you can just put like a little bit of emphasis on that, or how you can describe it also for people who are just like watching, because personally that's the one thing that I don't think I've understood completely. All the other, the
emergency fund or the money market?
The money market. Okay. Emergency fund, now I know. Yeah. Now I know. I learned the hard way. Now I just have like some money stuck aside for those emergencies. Yeah. But something like a money market. Yeah. Bonds, I understand, because that was easy for me to just watch a couple of YouTube videos and get a relationship manager after recommendation and just go through the products. And I was like, okay, this makes sense. Because we're talking about long term also, like from 5 years, 10 years, 15 years. So it just made sense to me. Money market, I just didn't understand because I don't know if it works like stocks, ETFs. Even after she described it to me, I was still like, I still need to do my homework because I still don't understand it.
So I struggle similarly. I don't think I've ever fully understood it, but how I understand it is it's very low risk investment option, very low risk. That's usually our emphasis on very low risk.
That's important. The most important part.
And with investments, the lower the risk, the lower the return. But anyway, because this is an emergency fund, it's okay to have lower returns on this. And it's usually run by institutions who then, you give them your money, who then also invest it in other investments.
Do they put the money in stocks or what?
For money market fund, I see most of them, at least the one I invest in, because I think different companies take different approaches. But the one I invest in, I see that a bigger percentage of what they invest in is treasury bills. Okay. They put their money in treasury bills, and also some very, very comfortable stocks, so to speak, but a very small percentage of that. Stock. But they really do treasury bills and also corporate bills and things like that.
So it's a pool of different...
it's
kind of like a mix of...
They've really mixed it all up to give you that low risk element that you need. But I see them also running other funds that are a bit of a higher risk. So for example, you see them talking about balanced funds and also I think equity funds and so on and so forth. So those are more high risk. Like equity funds, like 80% of it goes into stocks and shares. That's why it's a bit more risky. And then balance fund is where they balance between treasury bills and stocks to give you a balance on that. If you want to, gain from both sides.
From both sides.
But for an emergency fund, I would suggest personally a money market fund. I usually get very good rates on mine.
What's the average return? Let's say
my average return is around 12% right now on my
constant.
On my market
like
fund.
standard doesn't change. That's if it's 12%.
Last year it was an average of 12%. Okay, so what they do is they do it over a year, then they divide it by 12, then they give you the monthly. It's given monthly.
Or you get like your dividends monthly.
Yes, you get your interest monthly.
I can get into that. I can get into that. That makes sense.
And it's fun. And if you need to access your money 2 days, you have it. Okay.
So if you need to liquidate everything in case of something,
in 2 days time you have your money. So that's like for emergency funds that if you need to. And then now once you've established that, right, you move on to the other investment options. Now, there is no right or wrong when it comes to investing. I think that's very, very important to note. Okay, you'll never be, or rather, I would never listen to somebody advising me to invest in a particular stock, for example, or invest in a particular instrument. Okay, why? Because investment, is also something that should be held personal to you. Just take the time and learn the basics of investing, okay? And see how then it contributes to your financial goals, okay? You talked about treasury bills. I, for one, don't like treasury bills, but I like the bonds. I like longer investments because I already have my regular spending account. I have my emergency fund. So I want to put money for longer, okay? And right now we are seeing fantastic rates on treasury bonds.
There was a 15.8%. That one I just had to. I was just like, please tell me this is real.
Yeah, so we're seeing fantastic rates on that.
Yeah.
I think before that, there was one coming in at 14.9. There was another one at 13.9, which is very fantastic. Now, the problem is with bonds. When interest rates go up, the value of the bonds go down. So right now, if you want to get into bonds in the secondary market, the prices are very depressed. So people are not really selling. Okay, you look at banks when they're reporting their financials. You look at the line that reads bonds. They've really lost money there because the value of it has gone down. However, what I usually say is, even if the value has gone down, it's only paper value. You only lose that money if you sell. If you continue holding, exactly. If you continue holding, you might, get your gain. But anyway, you're getting interest on that every 6 months. Okay? So you could consider treasury bills and bonds. Now, a lot of banks. One bank I use in particular is Standard Chartered. They have offerings for foreign bonds, foreign shares, and all that.
I use that as well. I think mutual funds.
Yeah, foreign mutual funds. Yeah. And they have a whole list. You can choose whichever you want, and invest into those. That's also an option that somebody can take to look into this. Now, I'm speaking a lot about bonds, money market funds, because I am not somebody who is big in real estate. I've never understood.
Because we're going to get to that. Trust me. Yeah.
I've tried to. I've really tried to. I've never understood it. In fact, some of the pieces that I got to purchase personally, just to ensure that they're not idle, I've planted trees.
So you can only imagine that's like maybe a principal amount that could have been somewhere, and like you getting your monthly payouts, even like you've just described from money market funds.
Yes.
Or it could be like your bonds with semi-annual dividend payouts, or even if it's just long-term with compounding interest.
Yes.
Like if you compare it to real estate.
Yeah. I mean, real estate is a different game that maybe I haven't quite understood, but it's okay. Another place I really gone into strongly is people tend to underestimate them, that they're really good. The SACCOS.
Yeah, that one is something I just don't understand. That's another thing that I just haven't understood, but I would like to.
The returns are fantastic. I'm in 2 SACCOS at the moment. One of them gave me a return of 18% last year. 18%. It was 18. Amazing, right? It was amazing. And the other one, I think, was 15%.
That's too high.
Exactly.
That's compared to any other platforms. I mean, that's really good.
But I think they're usually underestimated because of the stories that come out of SACCOS.
We've seen them in the news, so everyone can be a bit skeptical.
Yeah.
Like every other time we get expose stories, SACCOS have always been kind of like
so there's that one. There's that one where a SACCO maybe went rogue. Okay? And then the stories are all over the place. Then the other one is most stories about SACCO comes in about loans. You know, people took loans from a SACCO and they're struggling ABCD. You see, that doesn't have to be you. You know, we don't need to attach a negative story to the whole concept. And that's why I'm usually very strong on, please do your own research. Okay, just do your own research. See how best you can gain off something. Don't let somebody else's experience be your experience. Okay, and it's very important to do your own research. And also be very pragmatic with your money, okay? One big story that is not so good came out on a high-yield bond that was floated by one of the corporates in Kenya. And people have really complained about it. These people are coming in and promising you a return of 20% per annum.
20, I'd just be like, I think, like, to be honest, and even just hold that thought, don't forget like your chain of thought. Even like when the 15.8% government bond was just like published and stuff, announced to like the public, like there was just like a whole debate like on Twitter, because everybody now started saying like, how is this even possible? Like, are we sure that this money is really going to be, you know, returned with due time? Like, but for me, I was just, how I looked at it, I was just looking at, okay, here we have the current government. The maturity date is still within when the government will still be running. So I do not think they would just do that without like a proper plan. But I think at times when you hear such high interest benefits, it kind of like makes you be skeptical. You think like it's just too good to be true.
And it's good to be skeptical, you know. Saiton is a very good example, and it's what I was speaking into. And I hope we won't get into trouble by mentioning Saiton.
But the conversation is already out there. It's already out there.
So they came in selling 20% return on their high-yield bonds. And one of the things I asked them is, what are you folks doing? Because at that time, government, the best you could get was 11% on the bonds and everything. In fact, even less. There was some fixed
10% there.
There were some FXDs coming in even at 9%. So Saiton was coming in at 20% per annum. So I asked whoever was trying to sell this to me, what are you guys investing into? So they said real estate. And I know real estate return at that time was around 6% per annum. So where are you getting this 20%? I immediately knew this is not a product that I would want to invest into because the people they're sending to sell that to me don't even know exactly how this 20% is going to be made. And this is some of the things that happen to some of these people. They feed on your lack of information on what they're trying to sell to you. They know the moment they mention 20%, you'll be sold and you'll go into it, right? And then you might just lose that. But having said that, even the most stable of investments, you can actually lose money.
At times,
you can actually lose money. And that's what investment is. You could either lose or gain, okay? So your knowledge about investments should be, how then do I reduce the possibility of losing money and increase the possibility of actually earning money from it? And you're looking at investments from two angles. Either you want capital gain or you want cash flow, dividends. So that then informs what sort of investments you want. I've been told that real estate is more about capital gain. And I see a lot of people do that. They buy land, then they say 5 years' time it will be more, so I'll sell it then. That's sort of capital gain. I'm not very strong on capital gain.
That's wishful thinking, because so many things can happen in between. Like, it's always...
Yes, there's so many factors to consider. One, and two, with respect to my financial goals, capital gain is not something that features strongly I really am into cash flow. You know,
I think even for me, that's why even with just the bonds, how I normally, I've just spread mine out. It's just so that I can get like my monthly dividends. I just want to make sure that I'm getting something so that I don't really have to think about bills or anything, and I can focus on other projects. I just need that money coming in.
Yes.
And, even at times, as much as we'd want to do the whole compounding interest and just give it like 10, 15 years, like your Warren Buffett, who are giving like 20, 30 years. Yeah, but we're just living in a very fast generation where I don't think I can see myself like just waiting for 15 years to see those. I don't know.
Yeah. Again,
I know they say
patience.
the power of compounding interest, but I don't think I'm patient enough to just wait for what's going to happen 15 years. I'd rather have my cash coming in now.
Yeah.
In case tomorrow, like, these institutions have like a whole downfall or something, or there's a pending case in court or something, at least I was working with my dividends towards something, and we can just focus on the court cases later on as we get compensated. If that's worst case scenario, that's a worst case scenario though.
Yeah, yeah, and that's true. And I always preach patience. I know it's very hard, but I always preach it. But those investments are key to get to where you need to be. And there's so many things you can invest in. You can even invest in, one of the things I've also done is invest in the local shares. This one's I'm doing directly. You'll notice that most of my investments I'm doing through an expert. Because I sat down, and when I started this, I said, by no way am I an expert. I always want to learn.
Yeah.
So most of the things I've done, like foreign and even treasury bills, I use the experts for that.
For sure.
For me. Fine, you'll give them 1.5% commission. That's okay.
It's okay. But they do their research, because getting into things like Amazon, Apple, like AI, electricity companies abroad, you might not really be in tune with everything that's happening there.
Exactly. So one of the things I've done directly so that I can learn is now on the local stocks and shares at the Nairobi Stock Exchange. Okay, so that I've just done on my own. And
you
one of
do
the
it
things
on your own?
Yes. One of the things I really, really learned that I like sharing on this happened last year. I noticed that the prices of a particular share, EABL, went really down. I think it was early last year. Can't remember when exactly. And I know it was really down because I'd initially bought it and it was quite steep.
Yeah.
Then it went to around 114 shillings per share. So I was wondering why.
How comes?
Yeah, what's happening? Because there's not really been a negative news about EABL. It's nice, it's stable and everything. So, I took the opportunity to get more. And after around 4 months, I see in the business news that the parent company, Diageo, has made an offer to purchase more shares. So I started asking, and I'm not saying this is what happened, but I just started asking, could somebody have known about this and, thought the prices to go low, then they acquire more so that they sell to Diageo?
Okay, now
things like that.
Yeah, that's very interesting. But to be honest, even you bringing up that conversation, and we'll go back to local shares.
Yeah,
it's like most of the, I don't want to say like big shots, but even in big financial institutions, at times when you see like cases on TVs or pending investigation of A, B, C, and D, like even on the lineup, you'll always see like the CEOs, when they're being questioned, they're like, okay, we know you probably knew maybe the company is going down. They say they had no idea. It's very interesting, but during that time, you acquired quite a number of shares.
Yeah.
And then after like a couple of weeks, shoots up.
Yeah.
So I think it's also, we'll go into the local shares. So just please don't bear with me and don't forget like your chain of thought, because I can get lost with that.
Yeah.
We always kind of have to be wary of things that are happening inside a company as outsiders.
Yes.
Because, if you don't know what exactly is happening, you might think like, if the shares are dropping, the best thing for me to do would be, let me sell now.
Yeah.
Count my losses before it even goes. So you sell, and then like you've said, after a couple of months.
Yeah, you see that kind of thing happening. But for local stocks,
Yeah.
how I've experienced it, get some money that you can afford losing.
Yeah. True.
Okay, and play around with it there just to learn. Okay, take time to learn, maybe a year. Then you'll be ready to put in a bit more and see how to play in that space. So normally my approach towards that is I look at a company and I ask myself, one, is it a monopoly or a near monopoly? I mean, that sorts you the first place. Then you look at the management. I mean, now as a rule of thumb, not even a rule of thumb, but something I've learned out of these experiences, I've noticed the companies whose executive, the CEOs, are very quiet in the media. They don't talk a lot. They're not in the media talking about strategy, talking about sales, talking about, the good things they're doing for the society.
Yeah.
Those are very stable companies because they don't feel like...
Do you want to mention a few for my viewers?
Okay, I'll just mention one. A company like Coop Bank. You don't see the CEO a lot talking about... In fact, I bet some of your viewers don't even know his name.
I don't know his name.
Exactly.
No, I can't even put
any
idea.
he's never really in the media.
Yeah.
Okay, talking about strategy, talking about how the company is doing, and you also don't see Coop Bank talking about how many kids they've taken to school.
Yeah.
They're just focused on doing their thing.
They just do their job.
Exactly.
Yeah.
I love such companies because it means they know what they want to deliver. They don't have to come to you to justify what they want to deliver. They trust in what they want to deliver, and that's it. On the other side of the spectrum, a company who's always all over, be very careful.
Yeah.
I'm not saying that's the case, but be very careful, especially if they're on and on and on about their strategy, on and on about how they are improving the lives of Kenyans. Yeah. You need to do further research before you buy into it.
Before you get into it.
Yeah, that's just mine.
Yeah.
My
I think
my
it's
way
just
of
the
looking
right
at
thing
it.
to do. Even when you mention it, just makes sense.
Yeah. So that's sort of the things I've learned through my little things I've been doing around that. Then you look at how ambitious they are, how they look at expanding. Okay. Are they just being operating within Kenya? Do they have ambitions to go out? And then how does that look to you as somebody who wants to invest in that company? Because investing in a company is literally buying a company. If you're to buy that company,
You're
what
part
would you
owner.
like to see? What would you like to see? It's interesting how inherently we are always very careful in our personal projects that we do. Okay, if you want to buy a shoe, if you want to buy a TV,
take time, analyze, see the reviews, everything.
Exactly. You ask friends. Even buying a car. You ask friends. Performance. All those kind of things.
Service.
So why don't you do that for stocks?
Actually,
suddenly when we go to stocks, we just we take what peers are telling us. Buy Safaricom. It's good. Buy whatever is good, but we don't do that kind of research that we do when I'm buying my own screen. When I'm buying, even when I want to get into a house, forget buying, renting. I do a lot of research on it.
A lot.
So that's the same thing you need to do for stocks and shares. And like I said, for me, near monopoly, what's the management like? Okay, then how has the company performed in the last 5 years? I usually base it in the last 5 years. Has it been growth? Okay. Or has it been flat? Has it been going down? And then, depending on what your objective is, if your objective is dividends, for example, the last 5 years, have they paid dividends? And if they don't, why? If there was a dip in performance, what are the reasons they're giving? Okay, it's very important. Right now, and I was just mentioning it earlier, a lot of companies are giving Ukraine. So there was COVID. Now they're giving Ukraine. And I'm just thinking, what about Ukraine?
Yes.
Like explain it better for me. Okay.
It can't just be that vague and I have no idea what exactly you mean.
Exactly. So how are they explaining the dip? And then be very, very ruthless in going for the annual reports that they produce. Okay. Every company listed has a mandate of producing
to.
an annual
They have to.
report. Now, the
however,
most important thing, yes.
However, even on that,
Yeah.
so just hold that thought.
Yeah.
But however, you have to understand, like, let's say from your side,
Yeah.
it could be easier because you have like 15 years experience in being in different financial institutions.
Yeah.
Somebody like me, I am not going through any financial reports. I can open, but I can assure you I won't really understand a lot of the things that I'm supposed to understand. And that also takes me to like even how I just started educating myself with a lot of just banking investments or just financial instruments that I can put my money into and get returns. There were so many big terms that are being used that if you're not like a financial expert or have that background, it's already like a headache.
Yeah.
Even before I just came to hold myself to understand, you need to understand what a dividend means and what semi-annual means and what annual means. It kind of, you can get lost because you're focusing on a whole different career path.
Yeah. So I might have worked for financial institutions, but in no way am I a banker. So I also struggle with those numbers. So the reason why I'm asking people to go to those books is not so that they understand the numbers, although that is important. It's very important. But you understand the business operation environment. Read that book from the back, because that's where companies put all the bad things that they don't want you to read.
Or it's their duty to
report anything bad, like who is suing them, and so. But
so it's included there.
Oh yes.
Oh, okay.
Read it from the back. They'll always start with the figures that confuse you, because they're thinking guys want to go beyond page 10.
Of course, you just close the book and you're like, no, it's enough.
So when I started reading them from the back, I started understanding the challenges that this company is facing.
It's facing,
Over and above the numbers, you'll see who is suing them. What are the chances of them winning? What problems they have with the regulator? What problem they have with the competitors? And so on and so forth. So read it from the back, going towards the front. Let numbers be the last thing if you want to look at the numbers. But I don't look at the numbers very much. I just look at what problems are they having in their operating environment. So that's very key for me to understand a business.
And also just to tap onto that as well, because you said you're doing your own personal investments in local companies.
Yes.
Like the one thing I think I've had difficulty in understanding that part, and that's why I went with something like StanChart. It's because just with their app, like, everyone now is just on their phone. It's easy to monitor like all my assets. I can just go check my bond status. If I've increased something, I can go and check like my mutual funds. I can see how they're performing just by going to the app. So now if it's investing in like local companies, is it something that you can do through an app, through a website, or you really have to go there physically? Because I think that's where now it becomes a challenge. If I know I have to walk in somewhere in an office, somebody will be in a desk and they might explain it to me in a way that I understand, but somebody will explain it to me just to get their job done, and that's it. How easy is it to do it, and how do you do it?
You can do it in our website. And in
Really?
an app, I use my brokers known as Sterling Capital, and there's an app, and I don't think it's theirs. I think it's any broker can use it.
Really, and you can just buy. Wait, you can buy and monitor as well.
Yes, you can have your portfolio value. You can choose the stocks that you want to buy, and it's called HISALink.
You learn something new here every day.
The app is called HISALink. So you need a CDSC number. Then you register on that, and once you register on that, you have access to all the stocks and shares. You can buy, you can sell, you can see your portfolio value at any particular time, and that's how I purchase them. I just do my own research, then I go into the app and I purchase. That
you put me on game right here today, and of course I'm sure like even a lot of people will be excited about something like that, especially for Gen Z. Like even for her, it's just I was trying to explain and have conversations to just try and see how younger people are thinking about money. And don't worry, we'll still go back and finish the investment part because we still have to touch on beloved crypto.
I know.
So, Gen Z, Eva, there's this thing. We had a discussion, right?
Yes.
And with her, I just want to get his feedback, right? And you just explain where you can. She told me, like, there's, with Gen Z, you just keep an open mind and just hear them out.
Yeah.
We've talked about crazy interest rates of up to 20%, right?
Yes.
She said there's this financial instrument she's heard of, right? Where you put your money. Let's say you have 100,000, right?
Mm-hmm.
I've never heard of crazy returns like this.
Mm-hmm.
You put 100K, right? You give it a couple of months, it doubles up. So I was like,
couple of months.
Have you seen his reaction?
It doubles up in a couple of months.
So that's 100% return, right? So I was like, okay, this is very interesting. So you mean to tell me if I gave you 1 million, in a couple of months it's going to be 2 million?
Take your money and run. Seriously.
So I just want you to kind of like explain to her, and like there's so many other people, and I think this is something that's common, and you've seen like in news stories and just like people online on Twitter, everybody is getting. And I was telling her that's what's called a pyramid scam.
Yeah.
Yeah.
Ponzi scheme.
Yeah, not a pyramid scheme. It's called a pyramid scam. Ponzi scheme, definitely. Because you're actually told, and even with her, go get your friend. Tell your friend to actually, the more people you bring,
the better for you.
Wasn't that the case?
Yeah.
But for her, it was like, at least you get to double your money. I was like, listen, you might be among the lucky ones who introduced that.
Yeah.
But that's just standard, something that's been happening over and over again. Yeah. It's just a scam.
Yeah. And it's interesting because I'd ask Eva, if I told you I have an instrument that gives you 20% per annum, do you know what that means?
Not really.
Exactly. So this kind of people feed on that.
Yeah.
Okay, they really feed on that. They feed on your lack of knowledge. To lie to you. And then they'll explain to you what it means, but it's not really what it means. It's just half truth. Okay? Because if they explained it fully, you'd start asking questions and you'd see that it's a scam. Okay? And it's not only you, so many people, it's not just the young.
Oh, yeah.
The old guys, they don't really understand what a return would be.
We won't even ask her where that idea came from.
Yeah.
Yeah, so we just have to hold on to that as well.
Yeah. So it's imperative that whatever you're sold, you really, really totally understand what it means and what it means to you and to your money. Like if I put 100, then in 3 months you get 200. The next question would be, Kwani, where are you guys? What are you guys doing?
What are you doing?
Exactly.
Why do you even need my money in the first place, by the way?
Exactly.
Yeah, why do you even need my money?
Those are the questions that come into play. I mean, be very hungry with knowledge. Seek it out because it's your money. It's not easy to earn. So you can't just give it to somebody and it disappears with them. Yeah. So ask questions. And one of the ways of discovering a scam is they start avoiding your questions. Yeah. You're on your 4th, 5th question. They're like, if you don't want to invest, just tell us. At that point, walk away because it's a scam. Something that's not a scam, they'll handle all your questions.
Everything you need
and come back and ask you, do you still have more questions or do you want me to now, invest your money? Okay. Yeah. So I ask questions just to bring out the scam in
just
something.
Just to see the feedback and the,
Yes, to bring out the scam in something. And also, because we talked a lot about investments, I think one of the things people struggle with when they need to get to where they need to be through investments is this option of should I buy a house or should I rent?
Yes. Okay. And that's also a nice debate. We can also just... Since you've mentioned it, just please tell us.
So again, on this,
your thoughts.
Say there's no right or wrong answer. Okay, but I'm against buying. That's where I stand.
I would listen. That's something that I've said before as well. I've said that before as well. So
the only reason is I'm against buying right now is because the only way people, especially young people, can afford a house now is through a mortgage. And I think a mortgage is a horrible product.
It's just been designed for you probably to never finish paying, first of all.
Yes. Yes. But it was an instrument that was created for banks to make money. Okay?
Yeah.
So they're
Yeah.
giving you a reason to borrow money. That's what I look at it.
That
they've
ties
made
you
it-
to the bank for a very, very long time.
Exactly. They've made it to look so cool to own a house through
Yeah.
a mortgage. Okay. And owning a house that you live in is not necessarily an asset, because people think it's an asset. It's not. It's taking money off you.
A house
It's
is a
actually a
liability.
liability.
It's a
yeah?
liability, that's for
So
sure.
there's nothing wrong. I met one person one day who told me there's nothing wrong with renting for the rest of your life. Why do they make it look like it's so wrong? However, again, I say it depends on your financial plan. Okay.
Yeah.
Much as I might be renting now, but I also have houses that people are renting.
True.
Okay.
True.
So they're literally paying for me.
Yeah. So that makes the houses an asset.
Exactly.
Because I'm just thinking, even if you think about it, even if you just got a house and the amount of payouts that you're making, that money you can easily just put in all these other investment pools that we've talked about, and actually start getting even immediate returns. But just sitting in a house that maybe you say, even if it's between 5 million to 15 million, whichever it is, or even more, that's just money that's stuck there. That's not when money can be working for you.
Exactly.
And you can get to live anywhere you want.
Exactly.
Something comes up, transfer, or something, let's say you have kids, a situation comes up and the kids need to move schools. Comfortably, if you're renting, you just pack and you just go.
Exactly. You don't have a lot to think about.
True.
When it comes to that. So next time, and owning a house right now, it's quite the talk in Kenya, because there's all this finance bill talking about
affordable housing
for people, and people are so passionate that finally I'm going to own a house. But I put them to task, and so after you own a house, then what? How does that improve your life, for example?
It doesn't.
Yeah. How does that make you achieve your financial goals? I mean, if it fits within that, then that's okay. But just think about it. How does owning a house help you? Personally, I saw it doesn't help me for now.
For now.
It doesn't. Maybe one day it will, but it doesn't. So I'm very happy not taking a mortgage. It's one of the top products bank sells, by the way. Again, goes back to my initial point.
Always.
Never go to those top products they're selling, because those are not meant for you. They're meant for them. And they're bad. Mortgages, like I said, I've worked with some institutions, and I see people go down on mortgages seriously. So it's a product that I wouldn't recommend. If the only way to get a house for you right now is a mortgage, I would say think twice. But if you have the money to buy a house cash, and you really, really feel you can buy the house, then buy. Or if you can raise 80% of the amount, then buy. Okay. But it needs to fit within your financial goals. Just sit down, work out your 5-year, 10-year plan, and if a mortgage of 20% of the amount it fits into that, then go right ahead. But not owning a house, is not such a bad thing. No. I think that's the message that we should start giving people out there.
I wouldn't say expensive, but I would buy a luxury car before I bought a house, because the car I'd be moving around with it in my line of work. First of all, my line of work, I need to move from point A to point B. I'd use it every single day to kind of bring me money. But I think for a house, especially, let's say, your average person who's actually even just going to work, you've already committed to this thing that's actually taking money from you. And honestly speaking,
you're rooted.
You're just stuck there. Just understand, even that work that you have, you can't even afford to lose your job already. You can't, because you lose your job. What happens?
And then try selling it. It will be
the
market for 5 years.
How do you liquidate a house?
Exactly. That's
right
the
now,
other problem.
I can only buy a house from sorry to say it, from somebody who's under distress. And they're just trying to dispose
and a lot of people are doing that.
Yeah.
And over and above renting and mortgaging, the other thing also that is important to understand your taxes, man. Okay.
Yeah.
Especially if you're doing side hustles.
Yeah.
Understand your taxes. Understand what tax you're supposed to pay, how it's calculated, how you can legally
Oh, of course, we have
pay
to.
less.
Of course. And that's why for somebody like me, and just hold that thought, that's why for me, something like IFBs, infrastructural bonds, to me, be like, okay, it's tax-free.
Yeah.
I know I don't have to deal with this.
Yeah.
That's okay. I'm getting into that.
Yeah.
But go on. Go on, sorry.
So understand your taxes. One of the things, not only taxes, by the way, understand your financial statements, documents.
Yeah.
So there's taxes.
Yeah.
There's the banks. Just ask for your bank statement.
See the
last
commissions
3
or something. Is
Yes.
that what we're talking about?
Look at how much the bank is charging you. Look at that and understand it.
Yeah.
If you have a credit card, I for one love using a credit card because I'm an avid investor. I don't want to hold money in an account and use a debit card. But if I need to spend, I'll use my credit card. I just make sure I use my credit card in things that are necessary so that I don't overspend on it. Okay.
You know, when you mention something, I just have like a question coming up with it. But go on, I already have the question.
So if you do have a credit card, understand all the charges that apply to that credit card. Okay. It's always good to pay your credit card in full when it's due, but should you not be able to? What is the interest rate that's charged on it? What are you charged when you use it on an ATM? What is the annual charge on that? Just understand that. Be sure that you know what charges apply to any instrument that you have. I see a lot of people, even if you go and take a loan, understand what that loan means. If you miss a payment, what does that mean to you? A lot of people call me and tell me I took a loan 2 years back. Right now, I'm seeing the interest is more than what I borrowed. I'm like, sit down and figure out,
what charges. It has compounded to a whole different number.
What charges apply? You need to understand that before you sign that you want a loan. It's very important that you understand what applies to you with respect to charges on any financial tool that you take. Very key. Taxes and charges on your financials.
So I would want to know, you've mentioned it, and I've said, I have to jump on it and just get a little bit of elaboration on that. What are the advantages of getting a credit card as opposed to just using a debit card? I know when in terms of maybe when you're traveling and stuff, I think they say for security purposes, if you lose any money from a credit card, it's insured and all that stuff. I'm not sure about that. So don't misquote me, but I think that's, apart from that, I'm just trying to understand what other benefit is there from using a credit card, considering a lot of countries that, let's say, how would I describe it? Countries like UK, the States, everything, they have all these credit systems in place, and it's almost compulsory that you have to use a credit system. Not just like us, you just pull up somewhere and you're just coming with cash. I want to buy this. They're like, no. You have to use credit card, credit system. So what are the advantages of using credit card as opposed to, I think, a lot of us who just use debit cards?
So the beauty for me in credit card is I let my money work for me. You see, if I was maintaining a debit card, for me to use it, I need to have money in a bank account.
Okay.
I'm very aggressive in not having money in a bank account. The interest rates are horrible. And there are charges. That's why I told folks, just look at what charges you have on your bank statement and so on and so forth. So debit card or even cash means you need to have that cash lying somewhere in a bank account. So I am very, very deliberate in ensuring that I only need what
You're not using your money.
Yes, I only put what I need in a bank account, and that mostly is what I know is, a regular monthly payment, that is fixed, because I know it's going to go anyway. Any other monies goes into an investment account. So that leaves me with a credit card that I can use for my regular needs, and then I pay it off at the end of the month.
So every month they send you
yes,
whatever is due, and then you pay that.
Yes. They send you a statement, which I never really look into because I can track my credit card on my app, right? So I usually just top up to the limit.
Is the interest crazy or reasonable?
It's crazy if you don't pay it all. Okay, so
if
a
you
credit
don't
card-
pay the monthly statement
Yes.
that they've sent you.
Yes. So normally in the statement, what they'll do is they'll send you how much you've used that month, right? And they'll, depending on the institution, they'll tell you that the minimum payable is 20%, okay, or 15%. Again, depends on the institution.
Yeah.
Okay. Mine, I think it's 20%. Okay. And the other 80% you can pay slowly. However,
Slowly, like you spread it out to the other months.
through other months. However, interest applies on those.
I know.
And for my bank, it's 3% per month on what's on what's pending.
Whatever is pending.
3%
So will that
per month.
3% carried forward, whatever you haven't paid, will it compound again to the total?
It will compound the following month. So that's
okay. So you have to just
36% per year.
we have to just clear like monthly.
So it's very important that you
make
clear.
sure.
Yes, because when you clear it, it's no charge. In fact, banks don't like you if you keep paying your credit
like,
card
this
to
one
the
is
full.
not a good. This is not the
Yes.
customer we're looking for.
And that's why they'll always write on the statement in bold, minimum 20%.
Yeah.
And you know when somebody sees that and go like,
no pressure. Yeah.
But what does that mean? That's what you need to
36 is
calculate.
high. If you,
So you mentioned first world countries like the US, the UK. You know, one of the things that they suffer most from is credit card debt. Okay. And it's credit card debt because they're not very avid when it comes to paying your credit card debt in full. Okay. So they carry forward amounts.
So
interest applies on that. And now the bank starts making money off you.
And that's how, like, most of them you hear they're in debt for like over 10, 15 years.
Exactly.
And I think even now you add things like student loans and that, you're just tied up into the system where you cannot, you're just paying debt over debt. And even if you finish this, there's something else waiting for that.
Exactly. So I'm an avid user of credit card simply because I want my monies working in investments accounts.
Makes sense.
Everything goes in there. If I need to spend any money, I spend it on my credit card. And I don't use it on the ATM because I think it's a charge of 10% of what you withdraw.
10?
Yes, of what you withdraw. So I just swipe it.
Swipe is zero?
It's zero charge. And if you
Why
pay-
10?
Again, they are looking for ways to get money off you, financial institutions. So it's very important that you understand how a financial instrument works. Now, lastly, because we were talking about getting to where you want to be through investments.
Yeah.
Lastly, there's the element of loans. Are loans good? Are loans
they bad?
bad? Yeah. Already I've talked about mortgages. I wouldn't encourage mortgages, but
It's up to you.
somebody might come here and encourage a mortgage, right?
Yeah.
But there are other types of loans, right, that banks offer. And these could be many, right?
Yeah.
A loan is not necessarily bad. It just depends on what you use it for, okay? If you took a loan to buy a car, then I'll tell you that's a bad loan. If you took a loan to do your wedding, then I'll tell you that's a bad loan.
Horrible, yeah.
Okay? So if you took a loan maybe to start a business, again, I would say that is bad, although some people would disagree, because if you're starting a business, you don't necessarily want to have a loan in it, okay? But if you took a loan maybe to complete houses that you're going to rent out, that's okay. So I look at it as investment loans. Take a loan to invest in an asset, and
How
you really
about
need to know what an asset is.
taking a loan and buying more shares or dividends, or bonds and bills? Is that something you'd recommend or no?
The only reason I would say no to that is because of what I saw when Safaricom was going public. I think they went public at 5 shillings per share.
Yeah.
And a lot of folks took loans to buy those shares. Then once the IPO went out, the prices dropped.
Yes.
Okay. And some banks then noticed that people were doing that, and they started putting those shares as security for the loans, which, by the way, also hurt them because the value
Of course.
of the shares went down.
It's not what they were expecting.
Yeah, and normally what banks do when the underlying asset that is security to a loan and the value of that asset goes down, they do what is called a margin call. What that means is they'll ask you to either pay your loan in full or add an amount equal to the gap created. Okay, so that they are protected from their side. A lot of people suffered from that margin call, okay? And they really got pissed off around investing. They've never really gone back to invest again.
Because maybe you went all out because this was a big opportunity. It's a well-known company. Why don't we dive into this?
Yeah. So that's why, personally,
You wouldn't recommend.
I wouldn't recommend taking it for something as risky as shares. Maybe treasury bonds and bills. I mean, if you can get a loan for right now for 12%, then you invest on the one that is giving 15%. That's a good loan.
Makes sense.
Yeah,
that's a very well calculated move.
Yeah, that's a good loan. Now, should you find yourself in a loan, okay? Let's say it's a 10-year loan, okay, with an interest of 12%. Before you sign in, there's some pertinent questions that you need to ask, and they need to be very clear to you, okay? One of the questions normally is, how do they handle any extra amounts you pay? So let's say you're supposed to be paying 10,000 per month, and then you pay in 15,000. Where does that extra 5,000 go? Why is that important? It's because how banks normally retrieve their money from you. They start retrieving the interest. They never start retrieving the principal.
Yeah.
They only start deducting the principal once you've paid off the interest. Okay? So which means then they can always calculate the interest based on the principal. So one of the questions you ask is, if I paid extra, can you make it so that it goes to the principal? Can I have a reducing principal? That way you'll pay less interest ultimately, okay, towards that loan. So it's good to pay extra, even
those
if it's
little
just
terms. If you don't know,
500.
but you see, if you don't know those little terms, you'll just say, "I'm just paying off my loan." So you're not paying attention to where you can actually.
Exactly. It's very important to always be putting extra towards the principal, even if it's just 100 shillings.
Just throw it in
going towards the principal, okay? It reduces the interest so much. You'll ultimately pay less. I've seen folks taking a mortgage, which I discourage, a 20-year mortgage, but finishing it within 8 years because they put in extras and they were very specific. This extra amount, take it to the principal. So that as the interest reduces, the principal also reduces.
I have a friend who's trying to explain that to me, and I just didn't understand because of just that difference on towards the interest and towards the principal. I just didn't, but I think I'll also need to do a bit of research, even though I'm not getting mortgage for anything.
No, but that applies to any loan whatsoever, right? Any loan, if you want to pay it off
or you faster, just know how you...
any extra, make sure the bank, and confirm, walk into the bank, okay, ask for your loan statement after you've paid extra, and check. If the principal didn't reduce, tell them, this is what you told me. And it's in the agreement. But then once you ask them whether that is possible, they need to put it in that
Now
agreement.
They'll disclose and tell you.
They need to put it in there. Okay, so that extras goes to the principal, and you'll pay much less in interest ultimately. So those are the tricks around these areas.
And you can see these are all legal loopholes on how, because like even the same way the bank is trying to trick you to pay more, you can find loopholes on how you can pay less. By just like educating yourself, just know where I can.
But they're not really loopholes. They're there, but they'll never tell you.
That's to me. I'm saying a loophole. It's because I've discovered like, so if I know this information, I don't have to pay as much.
Exactly.
Even though you won't tell me, I already know, and then disclose it to you so that I can actually pay less. Okay, so now, because I'm seeing like we've really actually clocked like some time, but I want us to touch on just crypto as we finalize as well, because we can always do like, I know before we get you again here, that's why I'm just throwing questions back and forth.
That's fine.
Because like the next time maybe we can still, if you still have time, I can always call you for part 2, and we can always have that follow-up discussions, because now I can write even more questions about. And to be honest, I haven't even touched half of the questions that I wrote down.
Finance is always emotive. There's so much to talk about.
So much to talk about. So let's just touch on crypto, because even just from that, the government just proposed recently, and I'm sure this is the proposal came because they noticed, like, you know what, this is an industry that's growing, or we've noticed people are capitalizing on it.
Yeah.
And the government has proposed what? One of the priority list of people that we want to start taxing now, formally, it's for crypto, NFTs, content creators. There's a long list of things, but on their first on the list was cryptocurrency and NFTs. So what are your thoughts about just crypto and NFTs? Because crypto is one of those places, I think, now for the newer generation, maybe. I'm not from Gen Z, but I can say I would rather take that high risk with crypto, with, of course, money that I know if I lose, it's all good. But what are your thoughts on just cryptocurrency as an industry currently and how it's growing? Because it's there. Let's just start with that. And for it to be there, we have to know, it's I don't know whether I can say government approved, but it can't function if the government doesn't approve it.
Yes, that's true.
Mm-hmm.
But, saying it can't function until the government approves it is some sort of a twist, a mind twist.
Yeah.
You look at the initiators of crypto.
Mm-hmm.
The number one reason why they were going into crypto is so that they could avoid government regulation.
That's why I say it's decentralized, right? So
Yes,
we have
totally
centralized systems now. That's your banking
Yes.
institutions and everything.
Uh-huh.
And decentralized means,
They wanted the freedom to transact
Mm-hmm.
without government or any regulators bearing down on them.
Yeah.
That's the concept of crypto,
Mm-hmm.
really. Okay?
Mm-hmm.
Now, which goes to the question, would you want to invest in something that is not regulated? Some people will say yes, others will say no.
Yeah.
Now, does regulation help in finance? Maybe that's not a question that we should ask ourselves. It helps a lot.
It does, because now getting swindled and stuff, that kind of...
Yes, not only that, right? There's that swindling bit, but I think crypto have handled swindling so well. So I don't think there's anything around swindling. Yeah. But there's an element of, should an institution handling your money go down, what do you do? Okay, and that's why regulation comes in to help. Right now, if a bank holding your deposits goes down, there's a procedure how you can recover a certain amount.
Very
well,
true.
it might not be everything, but
Very
you might
true.
recover something.
Very
But
true.
for a network that is not regulated, right, it might not be necessarily the case. We see stories of some crypto exchanges.
The
going
FTX
down.
saga, I think.
That
was a one-off thing. And you know why?
Yeah, it's one.
I still have to come in and just kind of protect the industry a bit. It's we'll go with your theory the same way you said. Let's not tie down cryptocurrency into one bad financial incident, because we still have...
make it representative of the industry.
Exactly.
And I totally agree. So I think the point I was trying to bring out there, had that been a regulated industry, those folks could have recovered some amounts, but they didn't. So that's the disadvantage of going into something that is not regulated. Now, the push for crypto was so strong, still so strong, so the regulators decided we want to have a bit of it. Not only through taxation, like you've mentioned, but you'll notice that a lot of central banks now are doing their own digital currencies.
We call CBDCs?
Yes.
Yeah.
Digital currencies. I don't know why Kenya went lukewarm on it. They were really pushing.
I don't want to say why, because here's the thing. Let me just throw it out there. In Kenya, there are so many loopholes that if they are closed down, especially with money that now somebody can control digitally, a lot of people will be in problems, businesses and all that. So I'm sure even people in those high positions know, before we approve this, and it's not just a Kenyan thing. This is like a worldwide thing. You'll just see all these incidents always coming up. Before we approve this, we have to make sure it doesn't affect us personally, because some probably have the big institutions, they have the biggest shares in A, B, C, and D, they hold a majority of the wealth as well. So
Exactly.
before approving, they have to make sure it doesn't affect them.
Yeah. So they were really hot on it, but they went lukewarm. But I saw Nigeria launched theirs,
They've gone all out here.
which is good. It's performing averagely, but it's okay. And I think why it's performing in Nigeria because there are some issues with repatriating dollars outside of Nigeria.
True.
So this CBDC thing really helped them. I see a few countries. There's Salvador in South America.
That's what's the president? Najib Bukele.
Yes.
Yeah, the president has really pushed
pushed Bitcoin to be
a lot.
a major
Yes.
transactional entity there, and also Chad tried to do that. But if you look deeply into that, you'll notice that the push for that was not really belief in crypto, but it was more of, it was very political because they were having problems with IMF and World Bank. And they
For El Salvador?
El Salvador
Okay.
and also Chad. They are having all these conditions being put on them around, with World Bank and IMF, and they thought, I don't need to be using your monies anymore. So I don't know, they were pushing more political, letting those institutions know that, hey, I could take this route. I don't need to listen to you. Okay?
Yeah.
So it was more political than the actual crypto. Now, have I invested in crypto? No. Why? Because one of the things I do when it comes to investments, I really need to understand it properly. Okay? And I will... One of the things that I look at crypto is that there's no underlying asset that supports it as an investment scheme. So it's very difficult to me to get into it. However, I've seen a lot of people, a lot of my friends are really into crypto and they love it. One of the people who believes in it, she's the CEO of a company known as Crypsense.
That's a Kenyan company?
That's a Kenyan company. I worked with her once.
Respect that.
At Safaricom. And she's running Crypsense, and she really believes in crypto, and she drives a lot of education around this crypto business, and she's all over Africa driving awareness and so on and so forth. I'm one of the people, one of her closest friends that has never really got into it, and it's interesting. I wouldn't say invest or don't invest, okay? I would just say do your research, and if it fits into what you really want to do, if you want to try it, to learn it, I tried. And I learned several things about it, okay? I made some money in it, but I just couldn't see the sustainability. Why? Because government institutions started getting into it. And once they start getting into it, they'll have like a stable coin around it. And right now, I felt people would migrate into the stable coins rather than the Bitcoins and so on and so forth. And that's why I thought I should out. But I see people very much having lots and lots of funds around crypto. And the day we'll have merchants, shops in Kenya accepting crypto as payments, that's the day I'll think, wow, this thing is really, really huge for us. If I can go to, let's say, a supermarket, one of the major supermarkets, and they tell me, yeah, we accept crypto, I'd be very, 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 excited. One thing about Africa that we don't seem to know is right now in Africa, and especially in East Africa, majority of these figures apply to East Africa. But generally in Africa, if you remove South Africa, okay, we have around 350 million individuals that are financially excluded. 350 million, okay? Now, if we continue at the pace we are going, right, by around 2050, we'll only have added 94 million to that, to the financially included, which means in 2050 we'll still have around 250 million financially excluded. Okay.
People,
Now, one of the reasons why this happens is because of infrastructure. The infrastructure in Africa is not so good, and that's why USSD as a touchpoint is still very strong. Now, this has hampered really the growth of crypto. That's number one, because the infrastructure bit in Africa. Secondly, you look at countries where crypto is strong. Some of the countries, not all. One being Zimbabwe, okay? Another one being...
they needed crypto.
Exactly. They needed crypto, right? So the push for crypto has been sort of negative, some sort of a negative events happening because of the inflation. So everyone was protecting their monies through crypto, and that speaks a lot to people who might be considering crypto. It's only for people who do that ABCD. And then I've mentioned the lack of merchant, interaction with crypto. So why would I want to be using crypto if I can't use it to buy something? I have to liquidate it first, cash out before I do that.
Actually, and even, sorry, just to cut you off, just to mention a few things. Actually, there's some places now, even in Kenya, you can just pay with crypto.
Yes.
Directly.
But the thing is, it's not known, okay? It's not something that an average person would know. Okay. It's only maybe the people who are involved in it right now that know. It's like insider information. That's the problem. I've always tried to understand why. Why can't it just be general? Why can't my aunt in the village know that there's this thing known as crypto? I mean, we can get into the mechanics of it that I can use to buy milk somewhere. Why is that
but you have to give it time, right?
Exactly.
You have to give it time.
There's time. So I'm just trying to explain why I feel it's been
like
kind of depressed here, and some of the things that maybe whoever needs to consider to drive it. I personally believe in crypto, and the very
Would you
basic
invest in
concept.
crypto?
I did once, but I outed, like I said,
okay.
when the regulators started considering their own central bank digital currencies, because I thought they'll bring some stability and remove that up swings and down swings of crypto, the volatility of crypto. So and I thought maybe now it would be good to out and wait for the central bank digital currencies, right? So I did try. It was fun, and I totally enjoyed it. Okay, but I don't really believe in it. Maybe I'm old school.
Really?
I don't really believe in it.
Because it's still growing. And if you think about it, if it wasn't a growing industry, it would have been stopped by now. But you see, especially like in Europe, you see like even Bitcoin ATMs. When we talk about crypto in general, it's not just about payment systems. And, you're coming from a payment system background as well. We have things like smart contracts.
Yes.
So that people like musicians, actors, anybody who's getting tied into and even just how smart contracts work with crypto is incredible.
Yes, but you see, smart contracts can work also with fiat currency. Now that's the problem. Okay. You see the technology. The technology that gives crypto and smart contracts, that blockchain thing. I think it's really been demonized because of Bitcoin. Okay. Because the major application of blockchain was crypto. So if you present blockchain as a technology to anyone, they look at it as a very bad technology because of Bitcoin. But it's really fantastic. All these things you're talking about, smart contracts. I'm currently trying to build a product that enables people to borrow against their NFTs. And one of the immediate NFTs I'm looking at is their data on the internet. We are all being told that data is the next whatever. And if data really is earning people money, why ain't I earning from my data? So we are looking at how you can now transform your data into an NFT, sort of. Attach value to it, and then now borrow a loan against it. Okay, something like that. But it's amazing how when you explain that technology itself, people always sort of default to crypto, they start demonizing whatever good things you're trying to do.
There's so much more that goes to the industry.
I'm a firm believer on those smart contracts things, NFT, if you want to put a value to it and so on and so forth, right? But I think we just need to be at a point where we understand the whole concept of crypto. There was a time I was asking myself, this lack of knowledge, and it's lack in quotes, is it deliberate? Okay. Do we want to put it among a few individuals? Or is crypto just so difficult to understand? For those who haven't understood it yet. Okay. Those are the two elements to it. However, if you read about it, you understand it, and it's something that you feel strongly about, then by all means, get into it, okay, and have fun getting into it. Do I see it taking over?
Okay, I
Over
don't want to say
traditional
traditional,
finance?
like let's say the current
Yeah.
financial institutions and systems. Do you think it's gonna take over it after a
No.
while? Really?
I don't think it's going to take over, but that's just my opinion.
Mm-hmm.
The reason why,
Yeah.
and I did mention this earlier, is the financial industry is very conservative. Okay?
Very
conservative.
And I think that's where the problem is now. Before are we adjusting to this now? No, we need to change our systems, train people, and make sure we are not getting into something that's not sustainable in a couple of years in future.
Yeah.
Mm-hmm.
Yeah. It's very conservative. It's one of the biggest industries that I believe would be so difficult to really totally disrupt. We see a bit of disruptions, which is okay.
Yeah.
Okay. But like totally disrupting it, like Amazon disrupted supermarkets, I don't see that happening. Why? Because one of the industries that's going to be disrupted last is the finance. So they've seen what has happened in other industries.
Yeah.
I don't think they're going to allow that to happen here. Then secondly, you see, like I said, regulators are also getting into this crypto thing, right?
Yeah.
And once they get into it, they have a slice on it, they stabilize how it's moving, then suddenly we'll see, very little activity going on around the crypto space. Okay? Then thirdly, for me, and finally, is who is crypto built for? I think that's very, very, very important. And at what point would we say the industry has grown? When who takes over? Okay. The Bitcoins have never really described who they've built this for. Okay. And they've never really gone out aggressively to capture the market, so to speak. We do not know who. We don't even know who started Bitcoin. I think, or maybe we know, but we don't want to share.
There's a mystery there to it.
Yeah. So there's.
Just finish the point before I go with.
There isn't a single entity that is, going out to such, capture the market.
Yeah.
Okay. And that might be a downfall for them. Because right now crypto is all about word of mouth, which is important. I mean, word of mouth is how most things happen anyway. But I believe normally there should be an entity like totally trying to drive that. We see startups trying to push
not even that. We've just recently seen
communities.
BlackRock trying to create like an ETF or something to Bitcoin.
Yes.
So
but what's important?
But BlackRock is one of the biggest financial institutions.
Ask yourself why they're getting into it. Sometimes they get into something to regulate it. Okay.
Yeah.
Not really to advance it. I'm not saying BlackRock is doing that. There are some of the people I use to get some shares in the US.
Yeah.
I'm not saying that's what they're getting into, but how I know financial institutions work, when they see something that is really, really gaining traction.
That's a threat to them.
That is a threat to them, or that could be a threat to them. They also get into it just to control how it moves.
Okay. True.
So ask yourself why they're getting into. They might be getting into it because they really feel they're going to benefit from it growing.
Yeah.
But they'll also be getting into it because they feel they benefit from it not growing.
That's true.
Yes.
That's
so
true.
That's what you need to discern and see what works for you. Look, these companies, the BlackRocks, the
JP Morgan,
these are huge companies.
Huge.
I usually call them TFW. Too big to fuck with.
Okay. Yes.
As if they really want to build something, if they really want something to grow, it will grow.
That's true.
Okay. So if somebody has been in it for a year and it still hasn't really grown, what then are their real intentions? Yeah.
Because even now that you mentioned it, even JP Morgan has been doing something to do with crypto, either in terms of helping like some of the investors to buy and sell. They're kind of doing something. And every time when they mention, even a tweet goes out, JP Morgan has done this and this, or BlackRock, anything to do with crypto. There's a huge pump in the crypto community because they're like, okay, if this guy's coming, it means they'll be buying like a bigger chunk of the cryptos and stuff. And also we have to keep in mind, crypto has a limited supply. when,
Yes.
as compared to fiat,
Yes.
you think about people are just, I don't know, I don't want to say people, but I think people are just printing money at some point to,
Yeah. To
just for the sake of it. So crypto, at least it's limited in supply.
Yeah.
And even just with countries, we've talked about countries like Zimbabwe, see how they get into those situations.
Yeah, yeah. And right now, one of the biggest users of crypto, you'll never imagine, money transfer organizations. Okay, the companies that handle remittances. So they'll collect your money from wherever. I saw now there's been an increase in remittance to Kenya.
Yeah.
So maybe from the UK they'll collect your money. Then they'll purchase crypto off that money. Okay. Then they'll come and cash out that money in Kenya and give it to whoever. Why are they doing this? Because it literally costs them nothing.
Yes.
To transfer that money from the UK to
the
Kenya.
fees are so minimal. And even apart from just that, sending like standard, I think in most banks, sending more than 10,000 US dollars, it's already like an issue.
Yes.
And if you think about like so many modern businesses right now, people are doing like way bigger numbers. Way bigger numbers.
Exactly.
And I want to be able to wake up in the middle of the night, oh, something has come up, because even after pandemic, you know, there are so many things that we can do online, and even just with organizations that are outside the country. Like, you can't tell me that I have to wait for 24 hours for the bank to open, and maybe also like after more than the 10,000 USD amount to be transferred, a proper explanation, like a composition maybe, or like, okay, why this amount? I think those are some of the things that in the crypto community and even such an organization would get into, because it's way much more easier. The fees are less.
Much cheaper. They're probably doing 0.1 to the dollar.
Super minimal.
And I was so surprised because I work with them to build some of the products I'm building. 2 years back, they approached me and say, right now I want to charge you to terminate. I'll actually be paying you to terminate. And I started wondering what changed all of a sudden. Like what changed? Then I realized that's exactly, it's so cheap for them to do that right now. And they're making a killing from it. And that's one of the reasons why I got out of that, because I thought if the central banks start running their own digital, these major users are going to shift to that. Because the central banks are okay with this. So they're going to, these are some of the heavy users, they're going to shift to that. And there might be an issue on these Bitcoins and Ethereum kind of currencies. So that's why I came out waiting for the Kenya one and the Nigerian one. And that's why I'm a bit sad the Kenyan one went a bit lukewarm.
But, it's still a growing industry. And
it is.
And there's so much to it. Honestly speaking, if, somebody like was even in a movie, like probably 10 years ago, and it's tied to a smart contract, you still get like those checks. Especially like, even in like, let's say even in our country, you'd see artists complaining all the time, like, MCSK collects cash and stuff. But, at the end of the year, we've gotten like, 3,000 and it's a whole band. But all these things, if they're tied into smart contracts and, automatically at the end of the year or a certain date, it just clocks in like this. It's midnight. That's what the contract said. Everybody gets their cut. Express. Just how it works, just incredible payment systems.
So my advice on crypto, just understand it.
Just learn more about
there are two ways. There's the long and painful way, whereby you sit down and read about it. Okay. The best route for me is pay school fees to it. What that means is get some money you can afford to lose. Get into it. Understand how the dealings and everything. You learn much more on that. And if it's money you lose, then that's fine. You've learned. And you might gain. Okay. And then once you learn, you give it a year. Once you learn, you can make an extra decision whether you want to go in more or you want to come out.
True.
And we see where this crypto goes.
Okay. So, like once, like just like the way I said, once we start talking about money and financial institutions, it can be like a never-ending journey of conversation. So I would rather we save anything else for part 2 Because you see, we haven't even gotten halfway with my questions.
Yeah.
And we've already clocked. We are close to 2 hours.
Exactly.
So, I really appreciate you coming to the platform. And I hope there is a way we can get you back for part 2. I don't know when it's going to happen, but I'm really hoping that we can get you back for part 2 before maybe the end of the year.
Sure. No
That's
problem.
possible?
Yeah, that's possible.
So what would be like your just parting shot for like my viewers and listeners in regards to like just, financial systems or finance in general?
Yeah. So your mindset about money, let that always be a positive mindset. Like I said initially, that your thoughts about money, your feelings about money, then informs your financial institution. Then secondly, don't overlook the aspect of health. Somebody once asked me, very interesting, suppose I was a billionaire and I told you can choose any car you want today and I deliver it to you. The only catch is, it's the only car you'll have in your life. Okay? How would you take care of that car? Like, amazingly well, right? But one thing we don't realize is that our lives, we just have it for the rest of our life. Our health, right? So how then should you take care of your life, of your health? Because that's where your financial wellness comes from first, your health. Take care of your health, then you can take care of your finances. And one of the most immediate ways that health affects your finance is when now you're in your 60s and your 70s. One of your major areas you'll be spending money on is on your health.
True.
So if you take care of it now, you might be lucky and spend less.
It will be easier as you grow older.
Yes. So health is very, very key. And then finally, knowledge. I think it's even written in the Bible, my people perish because of lack of knowledge. So get the knowledge. Always you get informed. The social media is good. Follow all these financial people, financial institutions. There are people who share really, really good knowledge on the social media around finances, personal finance. Follow them, listen to them, do your own research. Take some time, 15, 30 minutes a day, just to read on something about finance that you feel you want to understand, every day. And like that, you'll keep learning. And as you learn, you practice. And as you practice, you'll see whatever it is you're building, be it a portfolio, be it you trying to, reduce your loan, whatever it is, you'll see it, developing to where you need to be patiently. Be patient, because that's what we lack a lot, patience. And we make mistakes because we want to do everything now. Instant coffee generation.
Yeah, let's take time and just learning.
Just be patient.
Delayed gratification. Let's just put it that way.
Yeah. And should you gain from an investment or somewhere, just take some bit just to spoil yourself. Because I think that's one of the things we miss, right?
Oh, yeah. You have to take that profit, go out and buy something for yourself, treat yourself.
Don't be too strict on yourself. Enjoy your money.
That's true.
Yeah.
That's true.
So I think that's what I can say.
Thank you so much. So I really appreciate you coming to the show. And, I can't wait to share all this with people. I'll send some snippets to you as well.
Thank you.
Because we've just talked about so much, and yet I feel like it's so less, like there's so much more to put out there. We'll save that for part 2. But so I really hope you guys enjoyed the show, and we can't wait to take you to the part 2 and see you in the next episode. The Kisscapades podcast is your gateway to holistic growth and personal transformation. Together we'll unlock the secrets to living a life of health, wealth, love, and happiness. So make sure to tune in every week and join us as we explore the essence of what it means to truly thrive. And lastly, show us some love and support in our social media platforms from Facebook, Instagram, YouTube, Spotify, Apple Podcasts, Google Podcasts, basically all the social media platforms that support podcasting will definitely be there. Even with the short clips and reels, you can find us there. And lastly, don't be shy with feedback, suggestions, or any questions that you might have in regards to the episodes or our podcast. It's the Kisscapades podcast. Goodbye.